Hey all, welcome to ShareTreck. This is Raj here. Friends, good morning to you and hope you guys are all doing well. I'm going to just position my chart onto S&P 500 futures and then start talking. I have a few points to make this morning. I just want to share my state of mind with you guys and get a feeling of what you think about it. So I'm thinking that today is a high stakes day for the market. The January non-farm payrolls report, originally delayed by government shutdown, is going to be finally released today, this morning, and it should come out at around 8:30 a.m. Eastern time. It's my opinion that the investors seem to be cautiously optimistic, because there's a growing debate over whether the labor market is in a stable low fire phase, or is it in a more serious slowdown. So that's what we'll try to understand in today's session at around 8:30 a.m. In terms of the scenarios, I am thinking that if the NFP number comes below 50,000, I would categorize that as lower than expected. Just for context, let me just share with you the economic calendar. And let me see if you can have a look at what we have out here for the economic calendar. I hope this is coming out clear in your screens. To me, it does not seem that clear, but anyway, I'll give you my feedback on what I think should be happening. The previous was 50K, consensus is 70K. So lower than expected would mean anything less than 50,000, which will probably end up being bad news is bad news. Initially, stocks might pop on hope for a March rate cut. However, if the number is near zero or negative, the narrative will likely shift to recession fears, expect a sell-off in cyclical sectors and the Dow, while the 10-year Treasury yield drops in anticipation of rate cuts and easy money. The sweet spot, I think, will be somewhere between 70,000 to 90,000, which may confirm a cooling but resilient economy. It keeps a summer rate cut on the table without signaling a crash. Markets would likely see this as a relief rally scenario, supporting the S&P 500's attempt to hold record highs and potentially create new highs. If we have NFP number greater than 120,000, then we go into the territory of good news is bad news, because a strong beat would likely trigger a sharp hawkish response from the Fed. Investors would price out a March cut entirely, causing the US dollar to rally and tech stocks to sell off as the higher for longer interest rate narrative returns. So this is how I'm looking at it. So 8:30 a.m. is when we are going to get some idea of where we are at. So with that in mind, I would like to just briefly keep this, I'll keep this session a very brief session because everything else will be BS. Now, S&P 500 seems to be in this wedge pattern out here, and we have been contained by it in the last 2 days. In fact, this line of resistance is significant. We are struggling to go above that. Also, we have this diagonal line of support, which is a confirmed support. So we are struggling to stay above this diagonal line of support, and we are also struggling to break out of this horizontal line of resistance. Now, this line of resistance will perform the role of a resistance today at 6,982.75. And if we break out from that, then things should look pretty good going forward. But right now, we don't know. Yesterday was a doji candle indecision. Day before yesterday was also an indecision candle. Market sentiment is bearish. MACD is almost neutral. Momentum is also almost neutral. Now take a look at NASDAQ. NASDAQ also has a doji candle today, and it had a doji candle yesterday, which indicates indecision. It's firmly caught between the 50-day exponential at 25,469.77 and the 100-day exponential at 25,101.25. So these are the two extremes within which the price action is likely to have today. Market sentiment is bearish, MACD is bearish, and momentum is below average. So from that perspective, NASDAQ seems weaker than S&P 500. And I would like to look at the dollar index, which continues to slip down. It has got very good support from 96.62. For the last 2 days, we touched it briefly day before yesterday, and we touched it today and we got bounced back. The question is, how many more hits can this line of support take before it gives way and becomes resistance? Market sentiment is bearish, MACD is bearish, momentum is below average. We also have a target of 95.459 for the dollar index. Are we going to come to that? We came very close. We came all the way up to 95.563. And we are just short of this 95.459. So we'll have to wait and see what happens in this regard. VIX is again elevated. It's trying to break through a very strong resistance out here. So to that extent, I think the VIX can be contained, but anything is up for grabs once we get the economic data. Gold is still staying above 5,000. In my opinion, it's in a bull channel. I'll explain why. Because this is the flagpole that we have. And this flagpole spawned a bear flag. Now, a bear flag remains a bear flag as long as the flag body is below 50% of the flagpole. This is my understanding of how bull flags and bear flags work. If you breach that 50% point, then it's no longer a flag. It then becomes a channel. So in my opinion, we have already breached the 50% point of this bearish flagpole. This is a topping tail out here. I'll just move this flagpole so that you can see that this was a candle with a small body and a very long wick on the top. So the flagpole starts from the body, the solid body, and goes all the way down to where the trend reversed. So if you look at that flagpole and see where the price action is today, we are straddling that 50%. So today could decide whether this becomes a bull channel and we continue going up, or today becomes a day when we turn around back down, break through the support which exists at 5,004. Let us open this support. It exists as 5,004.867. If we break that and make that a resistance, then probability of falling down will be further, because then the bear flag will be intact and it will be a very mature bear flag ready to be popped. Market sentiment is bullish but tapering down and very flat. MACD is bearish. Momentum is still above average. So gold still seems to have some legs to it. So if gold appears to be stronger than S&P 500 and NASDAQ in terms of prospects, I would go with gold. So that said, let us look at the 10-year yield, which has dropped further, and it is getting some support at 4.135, but gold continue, 10-year yield continues to drop, and the drop in 10-year yield kind of indicates that the market is expecting bad data, the kind of data that would make the Fed bearish and cut interest rates. That's what the bond market is trying to signal. If rates come different, if the employment numbers, NFP numbers come differently, then this could bounce up and spike immediately. So anything can happen out here. Now let us look at USD JPY. It's going in the wrong direction for the stock market. As the yen gets stronger and stronger, the flight of money out of US into Japan becomes stronger, only constrained by the differential between the US 10-year and the Japanese 10-year yields. But as the dollar index keeps falling, the interest earned in US dollars on US treasuries appears to be much and much less when converted into domestic currency. So that's what we need to see. And in that light, if you see a higher Japanese 10-year yield for Japanese bonds as compared to 10-year yields for US bonds, along with the dollar weakness, then definitely there's a flight of capital out of the US and into Japan. That's the way I look at this. So with that said, I think I would like to end the session today, because 8:30 a.m. is very critical. Anything that we guess before that is going to be useless. I wouldn't like to waste your time or mine, and I'll catch up with you again in the next video. Yeah, I'm working on some interesting videos. It takes a little time, because if you want to do something properly, it needs a little time. I'll come up with something soon. I'll catch up with you again in the next one. Bye for now.